Cloud. All right, recording is on. So welcome everybody. This is AMA number 16. Lots of new faces today, so I'm just gonna break it down real quick. Usually the way these go is I do a quick presentation. It's about, I don't know. I always say 20 to 30 minutes. That's not true. I usually go for an hour. I don't think I'm gonna do an hour this time simply because honestly, I don't think there's that much that I want to share with you. So it's mostly gonna be well, AMA, ask me anything. So please ask your questions. If you see me looking in this direction, this is where I see your questions. This is where I see Bitcoin, which is what you see here. And let me kick this off with I'm not gonna pull any punches. To my knowledge, I wanted to do a bit of a victory lap, but it's a I shouldn't. Because I think I was one of the only ones who was at least warning that the market was not looking good. I know that others were too. There's always bears out there. I know a few of them. But all the people who I would call liquidity analysts, those of us looking at liquidity, I think I have not seen, let me put it this way, I have not seen anybody else talk about central bank liquidity and how strongly correlates with Bitcoin. It doesn't just correlate with Bitcoin, correlates with, I mean, look at this is, I'm not going to do that yet. I'm going to show you ETH in just a minute. It's picture perfect, very good correlation. And I believe this is why people I hold in high regard, like Raoul Pal from GMI or Real Vision or Michael Howell. Michael's not really a crypto. I wouldn't call him a crypto focused analyst, but he has been bullish. He has been warning of tops lately, but not really hasn't really nailed this sell-off. Now again, Michael's not really a crypto guy, so I don't know that what he thinks, his thoughts are on crypto. To my knowledge, the stock market still looks good, but the stock market is the last thing to top out. And I'm not even sure it will this time. I mean, I know there's people calling for recession and whatever. I don't know. I don't know about that. But if I zoom out here, this is 2025, and this, as usual, the orange line is central bank liquidity. And central bank liquidity, even though, I mean, even central bank liquidity kind of understated or underestimated this sell-off we're seeing here in Bitcoin, at least it warns us of it. The other thing, and I need to say this, is that if you follow cycle work and you draw the 80-day low VTL, which is right here, and let me switch that to using what I call Perry's version, which uses the lows, because it's actually a little better. And if I hide liquidity here, I teach that you should always watch the low VTLs, and I know I've been slow to roll out the rest of the course. But I have mentioned previously in other AMAs that you should always watch the 80-day cycle low VTL on Bitcoin, which I'm gonna paint. Nope, that's the wrong button. I'm gonna paint this blue. And in this bull market, and I want to be specific, in this bull market, every time Bitcoin crossed below this line, every time a sell-off or a long consolidation followed. Now there's only like three instances. It happened once in 2020, actually four instances. This is the fourth. It took place back in August. Now it happened in 2023. That kicked off. It didn't kick it off, but it warned that Bitcoin was consolidating. That was crossed in August as well of 2023. Bitcoin. Actually, you know what? Let me show it again because I always do, and I like it because it shows the power of cycles, in my opinion. Because without knowing anything about liquidity or any of that, you can just draw the VTL, these blue lines, and every time Bitcoin crosses below, this is 2023, at least the market is not bullish, at the very least. And those of you who follow me at Wise, I think I wrote in a report like a couple months ago, I said the shortest consolidation we have seen in this bull market following these crossovers was 2 months. And I said that back in early September, just to kind of point out the market is not really ready to break out yet. These signals are pretty powerful, these VTL crossovers, especially in this bull market. Now, I just showed you 23. I need to speed run through this because I've shown this a million times before, but it bears repeating. This is 2024. Bitcoin didn't really sell off here or in 23. This is a more bullish version of these crossovers. Bitcoin just goes sideways. But 24 was worse than 23 because Back in 24 and 23, we had maybe 60 days of sideways trading when this VTL was crossed. But in 2024, we had months. The VTL was crossed earlier in June, no breakout until November. But then we go to 2025. And in 2025, and I'm going to get into the black line in just a minute, I want to leave it there. 25 will have two crossovers already, that alone. And yes, I did say that. I'm pretty sure I said that in a previous AMA. That alone, the fact that we have two crossovers in a single year is bad enough, especially in 25 when that is when we expect the 4-year cycle to peak, to top out. The fact that we have two of these crossovers, it already shows you that 4-year cycle, that 4-year wave is losing momentum. I hope it makes sense as to why. So we have the first one here. Arvid, this is when I met you. Because I remember this is the Real Vision conference, which I will attend, by the way. I haven't bought my ticket yet, but I will be there. It's in late January.
Great. I'll see you there.
Yeah.
I'll see you there.
Awesome. Yeah, awesome. Awesome. See you there, my friend. Anybody who wants to join, those are great conferences, even though there were people dressed in banana costumes dancing because Banana Zone was coming. And they were doing this as this VTL was about to be crossed, which I thought was quite ironic. I mean, that marked the top, literally. A few weeks later, I was selling everything at Wise, and everybody was screaming at me because they don't like it when I just go sell, go to cash. Careful balancing out there. Anyways, I'll just say newsletter writing is not the same as managing funds. It's not the same. And so here we go. This is the crossover. That's pretty bearish. At this time, since I know some of you follow the altcoins, at this time when this VTL was crossed, the blue line, the black line was also crossed for some altcoins, for ETH, Solana, bunch of altcoins also crossed their black lines, which is again why, if you follow me at Wise, back in early, I would say, I think it was mid-February, we sold a bunch of things. And this is why. It's not because the blue line was crossed. I personally go to cash when this happens or hedge, but not if you can't use options and I'm managing a service, I'll usually just say, hey, there's a sell-off coming, but don't worry, it's nothing to be concerned about. The black line is crossed. This is a 320-day cycle VTL. That one worries me. So whenever I see it, I go to cash. No questions asked. This happened for altcoins earlier this year, which again was pretty bad because it started to warn this 4-year cycle is starting to peak. And we fast forward to now in August, but not now, in a few months ago. This is the second crossover of these 80-day low VTLs. Again, quite bearish, and even more so because this is the second of these crossovers, and the market has not moved at all by the time this happens. It just so happened that Bitcoin started the year at 90, because whenever I try to see what was Bitcoin's return in 2025, because it's basically flat, but technically speaking, Bitcoin was at the low end of the range when the year started. But we can say that Bitcoin started the year at about 100K. Kind of. It hit there. It went there for the first time. I think it was in December 4th. There we go. So here's a line. This is kind of where Bitcoin started the year, 100K. Makes it easy to track the year-to-date performance, which right now it's down in the year. That alone is pretty bad. But before then, when this VTL was crossed, Bitcoin was basically up, what, 15%? 15% return, and another VTL is being crossed. I was very concerned about this. Now, I'll be completely honest with you. Let me bring liquidity back on. I discovered this liquidity thing, honestly, because TradingView now has like economic data. And actually, this indicator you see here is now custom made because I can actually switch each and every single one of these. I copied the code. It's called a global liquidity index, but I copied the code so that I can tweak the how these had added up. So the one you're gonna find on TradingView, everything is added. It's the multiplier for every one of these metrics is 1. I made it so I can change each and every single one, but I go into the code and change it. Yeah, I'm not going to share this code unless you want me to, but yeah. What I'm trying to say is once I found that I could do this on TradingView, I started playing around with different liquidity metrics, and then I came across this. This is just central banks. I wanted to keep it simple. I didn't want to say, I wonder if it correlates with, the money supply of Europe, Japan, and perhaps the TGA, because that makes no sense, right? That makes no sense. Why would I add up those three things. It makes no sense. It might work, but it's going to break down at some point. That's too much curve fitting. I'm trying not to curve fit too much here. What I'm saying is, I don't care about M2. I don't care about this private credit stuff. I just want to know what's going on with central banks and whether or not Bitcoin. I actually just wanted to know what central banks are doing. I just wanted to answer that question. What are they doing? What's happening with them? M2 grows over time. It grows with the economy. This is especially, actually, this is true everywhere. But when you use this indicator, you're going to notice that if you bring up the, I'm not going to do it yet because the internet is a little slow. But if you pull up M2 from Japan, it's going to show a squiggly line. That's only because M2 in Japan is measured in yen, and this thing is in dollars, so you get the exchange rate conversions. But if you bring up M2 from the United States, it's just a straight line that goes up. Shout out to Mike Green. I don't know. He's on Twitter. He's awesome. A Bitcoin bear, but a great analyst. I think he runs money too. And he was the first one to point out actually every recession in the United States took place with rising M2. So M2 doesn't mean anything. He was the first one to point that out. Now, I knew that wasn't exactly true because he was looking at US M2, whereas we liquidity people are looking at global M2. And global M2 does correlate to Bitcoin, 84-day offset. That said, in my opinion, this is what I wanted to get to, the strongest correlation, at least since this high, since this July 14 high, the strongest correlation of any liquidity metric to Bitcoin has been central bank liquidity. Just ignore M2, just central banks. And central bank liquidity, or CBL, as I like to call it, was the only thing, literally, that was pointing down basically since July 14. It said expect another high here, a lower high. We actually got a higher high. Yes, I was confused by this. I did a podcast with Max at this time. I believe it was not my best moment. It was exactly on October 6th. And I was kind of gun shy because I didn't want to say, because I thought I was going to be wrong, to be honest. I'm the only one using CBL. Bitcoin is trading at new all-time highs. And just so you know, I think I've done some pretty amazing forecasts, but even I question my own models. So I was questioning my own models here on October 6th. Because, yeah, it looks good. Bitcoin had this amazing run the first week of October. It goes to a new all-time high. So all I told Max was, I don't think we're ready for a breakout yet. I don't think we're there yet. We might be, because these breakouts, and this is actually true, 80% of these breakouts to new all-time highs, they lead to new highs. This is a breakout of an 80-day cycle top. The 80-day cycle top was made in August. This is a breakout to that top. 80% of those produce follow-through. 80%. So I didn't want to go against that either. So I said, okay, maybe Bitcoin will stop following CBL. Maybe I'm stupid to be looking at this thing. But it's clear now that, yeah, Bitcoin is following central bank liquidity, and central banks have been withdrawing liquidity for months now. Mostly it's due to the TGA being filled out. The TGA is basically the US Treasury's checking account at the Fed. Whenever they sell all those T-bills, they stash that money at the Fed. Whenever they do that, they're actually withdrawing liquidity. This can get a little technical, actually. You should listen to Michael Howell on YouTube or follow his Substack. He'll get in depth into how this works. The reality is, if the U.S. Treasury is selling T-bills to banks, banks print money, so that expands the money supply. But if money market funds are buying those T-bills, they're actually withdrawing money from the economy, and that money is going into the Fed. It's the same as QT. It's another form of QT because there's money that's out there is being withdrawn from the economy, is being stashed at the Fed. That's QT. That TGA buildup, I'm going to show it here, has been pretty aggressive. So if I just showed you the TGA here, you're going to see how strongly it correlates with Bitcoin. Look at this. It actually, the TGA, this is the inverse of the TGA, inverted, because the TGA going up is negative for liquidity. TGA going down is positive, so it's positive for liquidity. But notice here that when does Bitcoin top out when we account for this 84-day offset? Well, it's right here. It's on October 8th. That will be the top. Not only that, they also raised some funds here in July. It also made Bitcoin sort of top out. The correlation here is not super strong. If I zoom out, it's not super strong. But we can say, and shout out to Raul Pal, I think Raul Pal was very early in saying this, at least for us GMI subscribers, he was early in saying it's mostly the TGA build up. Don't worry about it. I disagree with the don't worry about it part because I'm also a cycles analyst, and this price action looks awful. But look at this TGA being built up. This is mostly because the US government was shut down, and you can see that Bitcoin's crashing. So when people are saying, well, it's not longer working, the models are not working, liquidity is not working, no, it is. It is working. It's just that there's many different measurements for liquidity. This one, TGA, CBL, central bank liquidity, it happens to work better at this moment. I don't think it's going to last. But for now, it's clear Bitcoin's following this. It's following central bank liquidity. And what central bank liquidity is telling us right now, unfortunately, is expect more downside. So to answer the question that I'm sure many of you have, when do I think Bitcoin bottoms out? Well, not for now. And the reason I don't think it's going to bottom for now is because liquidity continues to go down and Bitcoin continues to follow it. Now, I'll add some caveats here. I have noticed that when Bitcoin tops out on its 4-year cycle, this 84-day offset, it's not valid anymore. It tracks in real time. Bitcoin starts to track liquidity in real time when the 4-year cycle peaks. Why? I have no idea. But check this out. This correlation is also pretty good. No offset. No offset here. And you can see that Bitcoin is sort of following it in real time, especially since it's high on August 4th. Sorry, October 4th. Now, here's what has me worried. Liquidity, even if we use real-time liquidity to kind of, let's say Bitcoin continues to follow liquidity in real time now. Okay, let's just assume that for a second. What's liquidity doing? Well, nothing. It keeps falling. It keeps making new lows. Last week I wrote at Wise. I said, well, look, there appears to be a low in liquidity. And by the time I recorded the video, that low was already erased. Liquidity fell back to making new lows. Now, I do think my outlook for liquidity is positive, and I'm going to get into why in just a minute. It's spoiler alert, it's the bond thing, but also it's because now that the TGA is filled up, I think it's going to start getting drained. That would at least give us a pause in the sell-off, at least once we start draining that TGA. So you can see here Bitcoin moving in real time with central bank liquidity. And I asked myself, has this happened before? Of course, I always do that. And yes, it has. Back at the last 4-year cycle peak, liquidity tops out alongside Bitcoin. And unlike, and I think I wrote about this before too, just like now, the fact alone that liquidity was going sideways was bad enough for Bitcoin. I wasn't really expecting this time around because I could actually point to something here. Back in December, November of 2021, the Fed is saying we're going to raise rates. We're stopping QE, we're raising rates. So it made sense to me as to why Bitcoin would suddenly anticipate this draining of liquidity. But none of that was happening this year, and yet the same thing happened when we apply the offset. Just to wrap it up. In 2021, Bitcoin, as it makes its 4-year cycle top, it begins to follow liquidity sort of in real time. So that offset disappears. All right, it's kind of the same thing we're seeing here. Bitcoin begins to follow liquidity in real time. Now, back to the offset, because these correlations shift over time, but it tends to go back to the way it normally is. So even though back in late 21, Bitcoin for a while was moving in real time with liquidity, eventually the offset returned. And in 2022, once we apply the offset, we can tell that the market is bottoming here in late 22, around December. The actual low was in November, but you can see that by 2023, correlation is back to normal, 84 days. And so I'm going to continue to use liquidity with an 84-day offset just because, yeah, that's what it normally is. Suffice to say, though, if you want to know what I'm watching, now that Bitcoin is moving in real time, which I know can be nuanced. Oh, is it 84 days? Is it real time? Well, this is markets. This is economics. These are organic systems. They shift constantly. There's a normal correlation. There's a correlation you normally see. And then there might be situations where things shift for a while. I think right now they're shifting. But again, I'm not too bullish right now because I especially would like to see the DTA being drawn down. If I see that and Bitcoin begins to respond in real time, because listen, even though this has an offset applied to it, if you see this with your offset chart and Bitcoin starts to do this, you know they're moving together. So that's why I keep the 84-day offset. It also allows me to see these two as separate things. And if it's moving in real time, I can tell because they're both moving higher. So I need confirmation that this is a low, and that confirmation is going to come from liquidity, in my opinion. I may be wrong. It's going to come from liquidity. Now, what happens if Bitcoin begins to rally and liquidity continues to fall? This is what I think we might see. Now, if this happens, I would just say, listen, we are in this reversal window now from a geocosmic perspective. We have the 20th, the 21st, and the 22nd as very strong reversals. And you can see that Bitcoin kind of tried to make a low here on the 21st. All right, maybe it rallies. Maybe it rallies just like it did here. For instance, in March, we had this rally in early March, even though liquidity was falling. We had this rally in early March, but then we make new lows. Why? Because liquidity continues to be weak. I would expect the same thing this time. So sure, we can get a rally. The market is the most oversold I've seen in years. And so yeah, it should rally, maybe back to 100K, but it's not gonna set a low here. I don't think it will. Could, anything is possible, but I don't think it will. Now, before I wrap up, because I only 25 minutes, that's good. Before I wrap up, why is my outlook for liquidity good? Well, because I wrote an algorithm that finds, I gave it two data sets, and then it tells me if one causes the other. Now, this is not true causation, this is statistical causation, and it's called Granger causation. But it kind of tells basically what it is. It's a method that moves one of the charts, moves it forward in time, and see if by doing that, the correlation between the two data sets improves. It's a mathematical way of trying to figure out whether or not one thing moves ahead of another. Well, guess what? I ran it with CBL, and the optimal offset is about 84 days. I think it's 83. I ran it with Global M2, very strong, very, very strong correlation there. Also, 80, I think it was 87, a Mercury orbit. So it was 87 days. I ran it with Asian liquidity, and it has the strongest correlation over time since 2010 through the present. The strongest correlation is there, Asian liquidity. It's just Bank of Japan, Bank of China, and their respective M2s. That's the best correlation long term. Somebody's asked me about this, if I'm done with Asian liquidity. No, I'm not done, but it's not working right now. And this is a couple months back, I said, listen, guys, I'm going to find a perfect liquidity indicator that's going to tell us what's going to happen. And what I found instead is that you can't do that because these correlations shift. So you need to keep everything in mind. I'm aware of what M2 is doing. I know what it's doing. I know it's going up. I think it peaked recently. I'm also aware of what Asian liquidity is doing. I don't have it here because it clutters the chart, but I look at it. And I'm also aware of what central bank liquidity is doing. And this is the best correlate right now. Just like I'm aware that actually the best correlation, bar none, right now is with the TGA. I'm not going to do that, though. I'm not convinced. I look at it, though. If I see the TGA move higher, reverse TGA move higher, TGA moving down, that's going to be bullish. It's going to get me bullish, even if it's not exactly reflected in the CBL chart. Now, before I move on to questions, when I started running these correlations, and Perry, you asked me about this recently. You said, what about gold? Well, the thing is, I ran it. I ran the correlation between gold and Bitcoin. It's not strong. It's not strong enough. I look for anything that has a p-value. It's a statistical, it's basically the probability that these two things are causing one another. I look for p-values that are much less than 1%. So probability of that correlation being real higher than 99.9%. Because I've been writing models my whole life, my whole professional life. And yeah, you're taught in school, 5% is good enough. Or 1% is good. Like 95% probability of correlation is good. 1%, 99% probability of correlation is good. In my experience, no, that is not true. You want 99.99999% probability that there is some correlation. Guess what? With gold, it's just not there. It's just not there. But I tried bonds and liquidity. Just maybe, right? And it worked. It's a 99.99999% probability bonds cost liquidity, statistically speaking. And I plotted it. By the way, I don't move these charts to see what fits better. I run the numbers, and then it told me, it said 44 weeks. which is about exactly 10 months. So 10 months. 10 months, bonds look ahead of liquidity. Just like liquidity looks ahead of Bitcoin, bonds look ahead of liquidity. This is what has me, uh, let me put it this way. I'm cautiously optimistic for next year because this model has been proven statistically. I mean, it's very strong correlation, 99.999% plus probability that bonds, at least in part, can explain liquidity itself. This is specifically central bank liquidity. It's not, I'm not talking about M2 or Asian liquidity. I haven't tried those out yet, but I will at some point. I know for a fact that bonds definitely do not cause M2 because, yeah, they don't. CBL has been falling, bonds have been falling, M2 is nonstop going up. I don't know that I'm going to find anything that correlates with M2. Maybe gold. I haven't tried it. But here's how strong this is, by the way, just to give you an idea. So the black line is a 10-year treasury. Why the 10-year? It's kind of a benchmark. I think it works with the 30-year. I think it works with the 2-year as well. But I tried it with the 10-year, so that's what you're seeing here. Now, forget what's happening now. Because, I mean, I've had a lot of people question this one. They accept liquidity, but not this one. This bonds costing liquidity, no. I've seen a lot of reluctance. Let me just close this up. But look at this. This is 2019. What are bonds saying? What are bonds saying in 2019? Let's call it in late 2019. What are they saying the liquidity outlook is for 2020? This is before COVID. What are bonds saying? Well, bonds are saying, oh, they're going to print money like crazy. That's what they're saying 10 months ahead of time. 10 months ahead of time. So this reading here in July, this is September of 2019. And bonds are saying, hey, it's going to rally. And it did. Now, in 2021, bonds were saying back in June, right? So this is with a 10, this is a 10-month, it's almost a year. So back in, if this is June, in August of 2021, midst of the pandemic, bonds are saying, hey, liquidity is going to start falling next year. And it did. So it's not as tight, this correlation, as Bitcoin and liquidity, but it's pretty good because they look out almost a year, and they get it right. The bonds or the bond traders or the bond investor, they get it right for the most part. Now again, it's not always there. For instance, in this bond chart, liquidity bottoms out in September 2022. This is a very important bottom for us because this lines up with the Bitcoin low. Bonds are just falling, right? So it's not perfect. Right now, it's been good. It's not, again, not perfect. Always off by a few months. So there's low here in bonds. For instance, here we have a low in bonds. This is with the offset applied. We have a low in bonds, August 23. The actual low is September, a month later. In fact, it's been off by a month most of this year, most of this 4-year cycle. So here we have a low in liquidity in June. That was forecast by bonds 2 months later, August. Same thing here. We have a low in January for liquidity, but the bond market said that would happen March, February. Well, the same thing is happening now. We're at the same point now where bonds are saying, hey, there's a low. I would say this is not a significant low. In other words, I don't think bonds are predicting QE yet. They're not predicting QE, but they're definitely saying that central banks are done withdrawing liquidity from the market. I don't know what bonds will do next. Some people say they're going to crash and they're going to fall. If that happens, we should expect liquidity to fall. So far, I don't know. But what I do know is if you add up the bond offset of 10 months plus the liquidity offset to Bitcoin of 3 months, we can see what Bitcoin should do 13 months from now based on the bond market. Again, not perfect, but at least it gives us an outlook, something to look forward to. Unfortunately, this is the bit of good news that I have for you. The outlook for 2026 is pretty good. Now, I don't know when the low is going to be in liquidity. According to the bond market, we should have seen it already, but we're not. At the same time, I just showed you these forecasts are off by a month. Easy. They're easily off by a month or more. So am I expecting liquidity to bottom out right now in November? No, I would not be surprised if liquidity continues to fall, or it's already late, so we know that this low is not going to be early. Let me change the color because this is liquidity. So we already know that this is off, right? And the last two lows, liquidity bottomed ahead of the bond market. Now it's going to bottom later, and it's going to average 44 weeks. But let's say January is a low at the latest couple months. There was some of these highs and lows were off by 3 months, but very few. It's mostly within a 2 month time frame. Bonds bottom out. 10 months later, liquidity plus minus 2 months, liquidity does the same thing. So I'm expecting a low sometime here for liquidity. Sometime. It could be before the end of the year. That's what some people are calling out for. Now, the specific reason they're calling for this, and I agree, is because the liquidity has been falling mostly because of the DGA. We have an expectation that it's going to start getting drawn down, and so liquidity should start moving higher. That's the expectation we have. So, liquidity outlook for 2026. Well, unlike every previous crypto winter, Bitcoin bear market, unlike all of those, where we had a negative outlook for liquidity, now we have a positive outlook for liquidity for next year, which is why I don't think we're going to have a super strong, raging bear market now, 90% lower. And I want to be specific here. I'm not talking about the altcoins. Most altcoins are going to go down 99% and they're not going to come back. But Bitcoin, Ethereum, I wouldn't even dare say Solana. But the low beta coins like BNB, Tron, they're gonna be fine. I think they're gonna be fine next year, even though technically speaking, the 4 year cycle has topped out according to the model. It's topped out. We're done. But is Bitcoin going to crash massively? Is it going back to 20K, 30K? No, I don't think so. So outlook for liquidity positive. Now, it could be another 2 months of this, of what we've seen over the past. I wouldn't say over the past two. What we've seen in November, that's abnormal. That's not usually how the bear market goes. There's pauses along the way as the 80-day cycle low, as the 80-day cycle bottoms out. It pauses, Bitcoin rallies, then it keeps selling off. It's not going to be like the past couple of weeks. Of course not. We're way oversold. But liquidity should make a low at some point, line up again with the bond market outlook. And the bond market outlook takes us all the way to September, almost early October 2026. So the first 10 months of 2026, pretty good outlook. What that means, and I'll wrap with this, what that means for Bitcoin. Oh, I shouldn't do that. I should not change these charts. Hang on, let me just bring it back. I'm working with tabs now. So what that means for Bitcoin is forget what happens now. I don't know. Maybe it bottoms out. Yes, the forecast and the fact that the market is extremely oversold. Yes, those two things. If you ask me, you put a gun to my head and you say, what do you expect now? I think Bitcoin goes back to 100,000. That's what I think happens. But it doesn't matter because it's going to be a lower high. I'm completely convinced of that, 100% convinced. It's going to be a low. It's going to put in a lower high and it's going to make new lows. So it's going to do this. It's going to go up, make it black again, and then it's going to go down again. And if you ask me, when is Juan going to be bullish on Bitcoin? When liquidity does this. I want to see liquidity go up. Next time I see that, I'm going to say, okay, that's the low. That's what I'm going to be buying. Not financial advice. Not going to tell you what to do. That's what I'm going to be buying. I still have some Bitcoin here because I like to sell calls against it. For some reason, the calls are still rich in crypto. So I decided not to sell all my Bitcoin. I sold 90% of it. I have a very small position. I'm just playing around with it because I'm an addict, or I don't know why I do this. I should have sold, but I didn't. I said, nah, I want to sell some calls. You never know, right? So I decided to trade with 10% of my usual allocation. And that's the outlook. Unless liquidity makes a low, I am not going to be looking for a bottom. All right, that's it. I'm gonna get to your questions now because this is an AMA and my voice is strained. All right, so let me get some water and get to your questions. So Perry's saying you had previously said the Asian CBL has a strong correlation. Is it an Asian Treasury DGA account to check that correlation? So the question, Perry, is do we have more? I would rephrase the question by saying, do we get a bit more resolution with other countries and what their central banks are doing? Unfortunately, no. And I've asked myself this question many times. Look, in this liquidity indicator, we have the Fed's official balance sheet, and then we have the official balance sheet also. We have the DGA and the reverse repo facility. We don't have that resolution for the rest of for the other central banks. I'm not sure. I'm sure they're as nuanced as the US, but the US is so dominant that I think it's fine. And the reason I'm saying that is this correlation is still pretty good, even though we technically only get a bit more resolution with the Fed, and with the rest, we just get the official balance sheet. And like I know that the likes of China are every bit as complex, if not more, than the United States. However, I'll say this, check this out, because you know what the strongest correlation long term was? It wasn't even Asian liquidity. It was the Bank of Japan. It was this. This was, I couldn't believe it, but it's true. This is the strongest correlation of them all. There's more than M2. This is more than Asian liquidity. This is more than central bank liquidity. Statistically speaking, this is the best forecast you can have. The Bank of Japan. Um, Here's the problem though, that doesn't I need it to make sense to me. Like I need these models to make sense. It doesn't make sense to me as to why just Japan is the thing that you should follow. And if you look at just Japan, you can see that the outlook for liquidity is pretty negative. It's pretty negative. There's basically two things that are dragging liquidity lower by massive amounts, dragging liquidity down. One is the DGA, and the other one is the Bank of Japan. The thing is, the DGA is so much bigger than the Bank of Japan's balance sheet that it's like I tend to think that the DGA will be dominant here. But I will admit that when I ran all these studies, I tried many things, and the thing that came out with the strongest correlation for Bitcoin was just the Bank of Japan. But it hasn't been super strong lately. You see, this is what it's done lately. Not super strong. That's also part of the reason why I said, you know what? Maybe it's super strong if we go all the way back to 2007. But I can see here that the correlation since 2021, you can see it here on the screen, not super strong. Bitcoin's up, making new all-time highs. Bank of Japan balance sheet is falling sharply. But you know how powerful this is? Here's the thing, the Bank of Japan balance sheet, when you use Bank of Japan, that liquidity only, guess when the market tops out? Well, according to that proxy, it tops out in Q1 of 2021. By the way, that April of 2021 top for Bitcoin, that's when a lot of altcoins topped out. They topped out in April. They did not top out later in November when Bitcoin did. Not only that, a lot of on-chain metrics, like on-chain activity, active addresses, that type of stuff. On-chain activity topped out in April of 2021. It did not top out in November. That's why I said the first weird cycle, the first indication that this current cycle was gonna be different, it didn't come from this cycle, it came from 2021. Back in 2021, we already knew this was extremely unusual. Usually, prior to this high in 2021, on-chain metrics and price used to move together, and they used to top out together. But not this time. So I found it interesting that the Bank of Japan balance sheet with the 84-day offset, and yes, it's like 83 days or 82 days. So it's always 80, 84, 85, 87, 82. It's right around, it's always less than 90, always higher than 80, this correlation. So it's pretty good. And I just found it interesting that alongside all these on-chain metrics and funding rates and that type of stuff, like leverage metrics, like market activity, topped out in April of 2021. So did the Bank of Japan balance sheet. So again, it's the strongest correlation, but once again, I don't think it's been good. It's been good in this cycle, but not perfect. So I wanted to see a bit more. That's why I default back to CBL. I just like that. I think it's a more rounded metric. But if you want to know long term, according to the numbers, it's actually Bitcoin follows Japan, just Japan. When I added China and Japan, the statistical validity of the model fell. It went down. Statistically, it's a less strong correlation. However, if I show the actual correlation, like visually, it's pretty good, except for the last few months. And this is what we see. It is pretty good. You also see a little bit of a dip here. We see at least a warning that something's not right. We get this. Of course, it tops out way late liquidity, that is. That always happens. Always. So I wasn't surprised to see it this time. It always happens. This 2024 correction, though, is just picture perfect for Bitcoin. It's just almost the same thing. This is Asian liquidity. And if we look at Bitcoin since the 80-day cycle low of January 2024, up until recently, the strongest correlation. And Barry, you asked me once also, like, does it change now that Bitcoin? No, it doesn't change. They can decouple for a while. You can see that they decoupled here in 2021. The correlation is still pretty strong. Much better than M2. It's actually better than M2 by an order of magnitude. So it's like if M2 is 99.9999% correlation, or has a 99.99999 four nines after the dot there percent chance of causing Bitcoin, then this one is 99999. It's another nine or another zero, if you will. So it's better by an order of magnitude, and it has been good, and it's done right now in 25. It's done the same thing it always does. It doesn't tell us where the top is. I've talked about this before. Liquidity doesn't call the top. That's why some people get it wrong, because they keep following liquidity, not noticing that liquidity never calls the 4-year cycle high. Never. It never has. And this year was no exception. So some things have not changed. It's the same as usual. Anyways, let me go back to CBL and keep moving through these. So Perry's saying it seems like BTC price action follows the liquidity up and downs, but that there's a different influence. You previously mentioned a few geopolitical news events strongly influencing price action, such as the Trump bump. Do those type of events explain all the periods of divergence from CBL alone? Yes, that's a very good question. Let me rephrase that question. So the question you're asking, Perry, is the reason liquidity and Bitcoin, central bank liquidity and Bitcoin have not tracked perfectly with one another, is there a reason for that? Have there been things that influence the price? I believe so. Now, this is my interpretation, and I've shown this before. This Bitcoin bottomed out here. And by the way, most liquidity metrics, Asian, Bank of Japan, I just showed you, those liquidity metrics, most of them, they bottom out. They started falling here in June of 23. They would not bottom out until December 23. Yet Bitcoin started rallying in October and September. Can we explain that? Well, yeah. This divergence, and I've shown this picture, a Weiss report. I know that because I used to have it drawn here. This difference, specifically this time period, where liquidity goes down, and Bitcoin goes up. This is ETF speculation. This is mostly ETF speculation. So we can explain that divergence. That was pretty significant. If Bitcoin had if it were not for the ETF, I think we would not have seen Bitcoin rally here. We would have seen it track with liquidity. Just my interpretation. We can never know. It's impossible to tell. But I will say, no liquidity metric was rising in Q4 23. Everything was going down, and yet Bitcoin was very strong. I believe that's ETF stuff, ETF speculation, because they fall back in line here on this high on January 9th. I don't know if you remember, but the ETF went live on January 10th. I think it was 9th or the 10th. That's when it went live. And exactly at that moment, liquidity in Bitcoin, boom, they fall back in line. And then there's another one. Here, this rally here. With this rally, so you can see that liquidity is falling here. This is 2024, the high in March, the low in September. And you can see that liquidity is falling, but Bitcoin's not really falling. It's kind of going sideways. But here's the thing. The reason for that is this rally, this specific rally. If Bitcoin had not staged this specific rally, it would have fallen in 2024 also. Now, what happened here is a failed Trump assassination attempt. That's what made Bitcoin go up. It literally made it go up because it increased his chances of being elected, and he was seen as a pro crypto candidate. He has been a pro crypto candidate. He has been, at least better than the alternative. Now, that's not enough to cause a bull market, as you can see, but it's enough to cause a 2-week pump. And that's exactly what happened. And so the reason CBL and Bitcoin look a little different here is just because of this one rally in the second half of July that had a lot to do with Trump. So again, geopolitical news affecting price. Even the Trump pump of Q4 of last year, hey, that's shown in liquidity too. So I'm not sure that has anything to do with Trump. It ended literally when liquidity said it would. So yeah, it was just this. The Trump pump, the real Trump pump, in my opinion, was just the second half of July 2024. That's it. That's all the influence he had on price. And he had others. I remember this rally here, this one rally in March 2nd. He tweeted something about the formation of a strategic Bitcoin reserve. And yeah, I think we're still waiting. So yeah, news can make Bitcoin diverge from liquidity. And I do believe, again, this is just a theory I have. I do believe that the reason we have seen Bitcoin diverge from liquidity is mostly because of that, mostly because of those two things: Trump being elected president and the ETFs being approved. It's mostly that. Because I mean, if I take you to Ethereum, this is amazing. This is still my favorite chart to look at. Not as perfect as it once was, but this is, you're looking at Ethereum since that same 80-day cycle low in late July of 24, and it's like looking at the same thing. When I discovered this, I said to myself, oh, I think I just found out why this cycle has sucked for the altcoins. It's because the altcoins follow liquidity too. And guess what? But they follow it more closely. There were no altcoin specific news in this cycle, except for this rally here in July of this year. This had to do with the passing of the Genius Act. You can see that this is the only significant divergence we see between Ethereum and liquidity. And what happened then was Genius Act was being passed. But after a while, after a couple of weeks, they'll fall back in line again. So it's like looking at the same thing. So we know that central bank liquidity has been awful this cycle. Could that explain what altcoins have been awful this cycle too? I think it does. I think alts follow central bank liquidity too. And central bank liquidity has been weak for years. And altcoins show it. The reason Bitcoin was a little different from the altcoins, I just mentioned that, is ETF mania, Trump being elected, all of that liquidity being pulled into Bitcoin. And no, I don't think Saylor has anything to do with this. I don't think he caused anything. The market is too big even for him. And he's about to find out, in my opinion. It's just a little prediction there. He's about to find out how big the market is. And so he's the largest holder. He's a target. So he's not going to be able to turn the tide by himself. He doesn't have enough capital or credibility. He's not the Fed or the Treasury. Anyways, moving on. Any comments on the fear and greed index being bottomed out so low? Yes, I saw somebody, Perry, mention that on the Discord. What I think this extremely oversold fear and greed index means is that we're very likely to see a strong bounce. That's why I just said, if you put a gun to my head, you tell me what's going to happen next. The market is so oversold. The 80-day cycle is so overdue. And plus the geocosmic forecasts are also pointing to a turning point here. Technically it's a high, but when it's crashing, any turning point is good to find a reversal. So forget that it says high, it's likely a low. So that's why I think right now the outlook over between now and year end, I would say an 80-day cycle rally is what I'm expecting here. That's why personally, again, no financial advice, personally I'm selling puts. I'm selling puts here. And because I think I'm not convinced how strong this rally is going to be, but I do think that between now and December expiration, Bitcoin is done going down. At the very least, done going down. And I think that's going to reset the index. Do I think that's going to cause a low? If I look at the index here real quick, just on this screen, come on. What I will say is that it looks to me that the fear and greed index set a new low in the low of 2021 versus the low made back in 2018. So if I was playing devil's advocate, I would say, hey, maybe the fear and greed index needs to go even lower now as this bear market bottoms out. In other words, I don't think that index alone is good enough to predict a bear market low. I don't. I think liquidity is a lot stronger, and liquidity is not good for now. So I don't think Bitcoin bottoms out with the outlook for liquidity between now and January being so negative. Again, it's between now and January. I think after January it begins to be more upbeat, but right now it's bad. And so I think that's gonna trump any fear and greed index. So that's what I think. I think it leads to a short-term pump, nothing else. All right. So can you comment on the dates in your forecast model for Bitcoin and later gold? We just passed the 11, 21, and 22 low predictions for 2.5 intensity. Many minor intensity dates in December coming up. I just touched on that. I think just the fact alone that Bitcoin is this oversold means we're likely gonna get some type of bounce here, but it's just it's not ready yet. And I will say, because I didn't quite explain that, this black line that you're seeing here, this is the 320-day cycle low VTL. So this connects 320-day cycle lows. This one and then this one, right? Okay. So every time Bitcoin crossed below this line, and there's only been 3 instances, but every time it was crypto winter. And from a cycle perspective, it should be crypto winter. Here's why. The next cycle in line after the 320-day cycle, this 11 month cycle, the next cycle after that is a 4-year cycle. So Hurst's definition of a VTL crossover is that the next cycle in line has either topped out or bottomed out, depending on which VTL it is. Well, Bitcoin crosses below the low VTL, the low 320-day cycle low VTL. That means this is like the strict definition of what this crossover means is that the last high that was made is a 4-year cycle high. And if this is a 4-year cycle high, we follow the train of thought, there's no way Bitcoin bottoms out here in November of 25. No way. Those sell-offs, they last about 2 months. And we know this because that cycle, that 4-year cycle that just peaked, according to just pure cycle analysis, that cycle started in November of 2022. If you add 4 years, you get to November of 2026. So can we expect a low in November of 25? No. No, we cannot. This is not the bottom, according to cycle theory. If we look at liquidity, is this a low? No. Liquidity keeps falling. So I will say again, I don't want to sound like a broken record, but everything points out to this high in October being significant, being a 4-year cycle high, and the outlook is for a continuous bear market into November of next year. If you want to fine tune it, you could say maybe the low is in October, because usually the low is reached about 12 months after the high is made, usually. And so it will be in October. It would not be in November. Fine. October, November is when we expect the bear market to bottom out. Now, I also said I don't think this is going to be particularly brutal. So do I think Bitcoin is going to crash or sell off continuously for a year, for another 12 months? No, I'm not expecting that. I think markets never do that. Let's go back to the last bear market, because I think it's a perfect example of what to expect. And I don't think it's going to be as bad as 22. Maybe Michael, I think, and I've said this before, could be wrong, but I think this cycle is going to wipe out Saylor. I think he's going to go away. Usually, these bull market heroes like SBF, Terra Luna, this Do Kwon, these guys, they just last for one cycle and then they go away. Well, Michael has been with us since 2020, and this is just my opinion, but all he did initially, he bought Bitcoin. Genius move. He had a lot of cash. He bought Bitcoin. Good stuff. But then he got a little Ponzi-ish. He started issuing shares, preferred shares, 10% dividend. It turns out that dividend's paid with future Bitcoin, future share issuance. That's a little Ponzi-ish. I'm not calling it a Ponzi scheme. It is not a Ponzi scheme for the simple reason that he's being completely transparent as to what he's doing. This is not a scam. You know exactly what you're getting into. This is not a scam. However, he's just borrowing money to buy Bitcoin. I can do that. I can borrow money, 100x leverage. He's taking on leverage to buy Bitcoin. That's it. That's the genius move. So I never understood the trade. And yeah, MicroStrategy was a great trade for a while, but I never quite understood why. Now, I thought initially in 2020, part of the reason the move was so brilliant is because they would not approve a Bitcoin ETF. So MicroStrategy sort of become a proxy for a Bitcoin ETF with leverage on top. So that was good also. Great move. Like I think he just overstayed his welcome. He got too big. He started getting more and more creative. And I think eventually he's lost the way. Right? He overdid it. Great idea. He overdid it. I'm not sure. I saw recently, one of you guys put this out on the Discord. I read it from this Ran Neuner, I think is his name. I thought it was interesting, very interesting take about MSCI and other funds deciding that maybe the digital asset treasury companies are funds, not really companies, because what's their business? Their business is what, to buy an asset and hold it. I agree with that ruling. I think there should be considered funds, not real companies. These are not companies, these are funds. If your entire business model is to issue shares and bonds and buy an asset, you're a fund. You're not a company. So, and again, I'm a fool because I totally missed the MicroStrategy trade, just like I missed the Zcash trade. Because sometimes I guess I'm wired that way. If the trade doesn't make sense to me, I don't get into it. MicroStrategy never made sense to me unless you were bullish on Bitcoin and you're managing a multi-billion-dollar fund and in the United States, and you're barred, you're legally barred from owning crypto. So you can buy MicroStrategy. I thought, in fact, for a while, I thought that was Michael Saylor's angle. I think he was going for that. I'm going to be the ETF. I'm going to be the ETF they don't want to approve. Okay, but the ETF was approved in January 2024. So that's the trade ended in January of 2024. It makes no sense to me as to why you would buy MicroStrategy with all the risk that comes with that instead of the ETF, which is a pure play on Bitcoin. And so I just never understood the trade. And I think, again, he painted a target on his back. The market's going to go for him. We know I think his pain level is 75K. I think that market is going to seek that pain threshold. I think he's going to get tested. Does he survive or not? I think he's smart enough to survive, but he's going to take some damage. That's what I think is going to happen as this bear market unfolds. So every bear market comes with these stories, going back to the bear market. And you can see the bear market of 2022. I'm going to show you all of that. This is the bear market of 2022. If you count in time, just in terms of time, how much time does Bitcoin sell off? Well, let's look at it. It's a couple months here, 73 days here. That's the first sell-off. Then we have another one. Oops. We have another big sell-off here, 80 days. And we could mostly say that was it. That's all the time Bitcoin spent going down. Meanwhile, we have about 380 days of bear market. So you can see only a fraction of that bear market is actually prices going down. Most of the time, the price doesn't go down. This is something that, I don't know, to me, it's by the way, the same thing is true of rallies. But markets spend most of their time going sideways. This is just a statistical fact. Most of the times, markets don't do anything. So bear markets are no different. Most of the time, Bitcoin is not going to be going down as this 4-year cycle sell-off unfolds. Most of the time, Bitcoin is just going to go sideways. And people are going to buy the dip and say, that's it, that was the end. They were saying the same thing here in Q1 22. They were saying, that's it, that's the end. In my opinion, I respect all these people, but they're not. I do believe that if you have a cyclical mindset, you're better equipped to handle these sell-offs because there was no way the low was made, in my opinion, back in February of 22 or January of 22. No way. Like no Bitcoin bear market lasts so little. There's a pause after about a couple months. We're getting there. We're getting there right now. It's been about 2 months. We're about to see a pause. What's the pause going to look like? A lot like this. Bitcoin bottoms out at 30, 45, and I think I sold my last Bitcoin at 47. So it never quite hit 50. I sold it here. Total random luck. I just happened to sell it here. Um, then it went down again, and then again it spent months doing nothing. If it wasn't for FTX failing, these two red candles here, if it wasn't for that, Bitcoin would have just gone sideways into a low in November 2022. No new lows would have been made. And then from there, it goes up. So I'm expecting something similar this time around, except much less bearish. Simply because the market was not as overbought as it was back then, back in November of 21 when it peaks. Market's a bit more exuberant, a bit more overbought. We're coming from this massive 2020, early 21 run. And so the market had a lot of correction to do. Markets like symmetry that way. If it goes up a lot, it's going to go down a lot. But now in 25, and during this entire cycle, Bitcoin has not gone up a lot. So I expect that this will last for about a year. But I would not be surprised if we see, let's say, Bitcoin could bottom out here. This could be similar to that low in January of 2022. Goes to 100K. Spends a few months here doing nothing. People are buying the dip. They're saying that's it. We made lows. But liquidity is going to continue to point down, and then it's going to go down again. I think the low is going to be maybe 50. And it might be reached soon. Listen, I don't want to speculate too much as to how this bear market will unfold. I just know that from a price perspective, I don't think it's going to go below 50. That's from a price perspective. From a time perspective, though, it should make a low sometime in Q4. So if we add those two, put those two together, I would say that, not that anybody's asked me this question, but I'm sure some of you are wondering. I have a sense that maybe what we see is some type of Q2. Let's say we reach 50K at some point in the first half of 26. Then we have a powerful rally. And then we just retest that low of 50 in Q4. And that would satisfy the cycle model. That would satisfy cycles. This would look like a 4-year cycle sell-off, just a weak one. We've had a weak 4-year cycle rally. Why not expect a weak 4-year cycle sell-off? That's what I'm expecting. I don't think it's going to be brutal. I don't think it's going to be terrible. It is for that reason that I'm selling puts. You're just trying to accumulate here, not specifically at these prices, but 50 or 60 starts to sound attractive to me. Now, again, we're going to continue. We're on the Discord channel. We're going to continue to do these sessions, these AMAs. A lot can change. If Bitcoin goes to 50 by December, then yeah, I think it goes to 25K as this 4-year cycle sell-off unfolds. If it pauses here, as I'm expecting, at 80K, then I think it holds. I think 50 holds. I think 80 should be support, maybe 75. That's Michael Saylor's level. That should provide support. 50K with strong support back in 24. It was also sort of kind of support resistance back in 22. Bitcoin rallied up to 50, and from there it sold off. So unless we have any of these negative catalysts like Terra Luna, FTX crashing, all of that stuff, the outlook for liquidity is going to play a large role into what we're going to see. Because if liquidity is indeed positive or upbeat or not terrible for 26, then it's not going to be a terrible bear market. I still think because cycles are king, I still think that because the 4-year cycle has stopped out, and because these 4-year cycle sell-offs tend to last about 12 months, we're going to see that. We're going to see the same thing. If it's short, it's going to bottom out in September, but it's not going to be in 25. We will see new lows in 2026. Liquidity is telling you that. Just liquidity alone is telling you that. So buckle up, because we're not done. We might be done with this leg down, sure, but we're not done. We're not done until liquidity turns up again. And then we have to see what that looks like. How is it turning up? Is it strong? Is it weak? Is it going sideways again like it was here in December? Or is it actually rallying strongly? Let's say, is it making new highs? That's not what the bond forecast is telling us. It's telling us not to expect new highs in CBL in 2026. But does it do that? Does it actually make new highs. That will make me bullish. Maybe it is a truncated cycle after all, and it just bottoms out and makes the all-time highs in 26. A lot is going to be riding on that liquidity line, and I'm going to be watching until proven wrong. I'm going to be watching central bank liquidity. Until proven wrong, that's the one I'm watching. All right. When are you releasing the forecast models for 2026? Great question. Very soon. Now, I'm just going to explain a little bit. So I'm using the 80-day cycle for Bitcoin to produce those forecasts. It's mostly that. And then sometimes I create a composite between the 320 cycle and the 80-day cycle. And sometimes I use the 160-day cycle that it's still there, but it's weak in Bitcoin. I teach it in lesson 7 of the course. I promise you guys who joined from YouTube, you're gonna see it. I'm already working on that. I've just been super busy, but now that I moved in, I'm gonna start working on the new lessons. And I teach that there's this intermediate cycle, 160 days. It's there, but it's weak. I don't use it much. However, I found that trying to forecast that 160-day cycle is pretty good because it allows us to forecast strong 80-day cycles. So not the weak variety, the strong ones. And I create a composite of those. There's no set methodology for this yet. I'm still playing around with it. That said, when I forecast a year, I want to have all of the turning points for that cycle for that year. So I'm waiting for Bitcoin to make its final 80-day cycle low before I release the forecast. Now, I don't think we're going to be able to confirm a low from a cycle perspective using the filter, which is this one here, 20-day cycle filter. This thing needs a month to confirm an 80-day cycle low, and Bitcoin is free falling. So I don't think we're there yet. So I might just produce a forecast, early December, or at least a preliminary version of the forecast. I don't think the one turning point we're missing is going to change things that much. So expect it over the next few weeks. I'm actually looking forward to seeing what that looks like. But yeah, over the next couple of weeks, I'm gonna have it. Are there any altcoins on your radar that look promising if BTC comes back up to 100K? No, none. I mean, let's see. I think some might exaggerate the move, just like always, but I don't even know that it's gonna be tradable. It's very dangerous to trade those because those rallies tend to end abruptly because the Fourier cycle trend is down. So the Fourier cycle is pushing prices lower. Usually what you see is a pause. So you see something like this. You see this. It ends abruptly. And by that I mean, if I bring up the 80-day cycle filter, notice this. This is an 80-day cycle. It's a short one, right? According to the filter. This is what I teach in lesson 1. You can watch it on YouTube. All of you guys, you can go watch it on YouTube now. That's where I teach. Actually, lesson 2, that's where I teach how to do the cycles. You divide the frequency of the cycle by 4. In this case, 80 divided by 4 is 20. 20 gives you a moving average. You're seeing it here. And then you just place that backwards by half of the frequency or half the duration of the moving average. 20-day moving average, that means 10-day minus 10-day offset. It fits the price action. This is called a center moving average. You do that, it highlights all of the 80-day cycles for you. This is what my computer model does. This plus a bit more, but because a computer needs a bit more than this. But that's basically the definition. And you can see that we have an 80-day cycle breakout here early in March of 2022. As soon as the breakout took place, boom, markets crashed. And you can see the speed of the move. So it takes Bitcoin. This is why I don't like to buy these bear market bounces, because it takes Bitcoin. Let's see, it took Bitcoin 2 months to do 10%. What is it? A 35% move. 35% move if you can catch the low and sell at the high. If you can, which you can't. If you can, you got lucky. You cannot do it with so much precision. It took, let's see how long it took to make new lows. So new lows were made here. It took, let's see. this may not be a good example. Half of that, right? Half of that. So we have 65 days to go up 30%. That move is entirely undone within 35 days, and most of that is within the first 15 days. So it's the opposite of an uptrend. When you have an uptrend, it takes the market a lot of work to do something like this. For instance, what you see here in 2023 takes months to go down from 30 to 25. But then as soon as that 80-day cycle, or in this case, the 320-day cycle, as soon as it makes a bottom, all the cycles are pointing up. Boom, you have an explosive price move. Okay, the same true is in reverse in a bear market. It takes months of work to push prices slightly higher. It takes a few weeks to just undo all of that. And so you have to be extremely nimble, extremely careful. These are not buyable, in my opinion, unless you're doing options. Lately, I've been experimenting with doing options for these forecasts. I think that's the best way to play them. No, I'm not long calls here. I'm short calls. I'm short puts. I'm doing like a strangle here because I think the market is going to be mostly range bound between now and December. So I'm not really even buying this because I don't think it's going to be that strong. So by that, I mean, I think Bitcoin's going to be weak. And by extension, the alts, they'll be weak too. Let's say ETH can go to 4K. Maybe it goes to 4K. I'd be shocked to see that type of move. But maybe a lot of people went short. Usually, Perry, one thing that I've seen is sometimes, actually, ETH is a great example of this. Sometimes if people are using a lot of leverage and the market is too one-sided, a small blip in liquidity could translate into a massive move in price. This example here from ETH is perfect. Everybody was shorting ETH here in May 24. Everybody's bearish on ETH. And this candle here, this massive rally, 20% move in one day, I believe this is because the ETF was approved. Somebody can correct me here, but I believe that's what the catalyst was. That caused a 20% move. Now, it is kind of highlighted by liquidity. Liquidity highlights a weak move. Instead, we get a pretty strong move, mostly because people were short. Basically, they were taking leverage on the short side. So it moves up by 35%, even though it's just a blip in liquidity. Some alts could do that in this coming bounce, if it happens at all. So there's a little blip in liquidity here. And if people are too bearish, and we know they're bearish because the fear and greed index is extremely negative, that small blip in liquidity could cause prices to go up 35%. Massive move, which would fade quickly. I don't know which names would do this. I suspect maybe Zcash because it's been going wild. Even though crypto's tanking, Zcash is doing great. So maybe Zcash can do well. I'm not good at this. If I were to play such a trade, I would look at short interest. I would look at open interest and to see which major coins have a lot of short positions open. The ones that are heavily shorted, if the markets bounce, those are the ones that are going to go up the most. Those vertical runs that you see in bear markets, that's short people. That's short covering. That's all it is. It's a short squeeze. So we might see a few of those. But again, I'm just not good at pinpointing which ones those will be. It could be Solana. I don't know. I know Zcash maybe. By the way, yes, missed the trade. Why? It makes no sense to me. I don't know why Zcash is doing so well. What's changed? Somebody tweeted something. Okay. Privacy on Zcash is not the strongest. It's not the strongest. They could find you. If you have Zcash in a transparent wallet, they can track that. If they see movement into a private wallet, guess what? That's likely yours. So they can track you. The real good privacy coin is Monero. This is a real privacy coin. And this was not perfect either. It has some issues. I used to love these. I wrote reports about these. This one has privacy on by default, and the governments hate it, which tells you that's a good thing. Governments hate privacy, financial privacy. They want you to pay taxes, so they don't want you to hide your wealth. This coin allows you to do that. That's why it's delisted from everywhere. It's a cockroach. Nobody wants to touch this thing. But you can see that it's not doing so well. So this new privacy coin season is a little fake, in my opinion. It's like buying MicroStrategy stock because you like Bitcoin. Yeah, Zcash is not the Winklevoss brothers announced this. They're going to turn some company into a DAT for Zcash. Ironically, all of that Zcash is going to be fully transparent. Kind of defeats the purpose, doesn't it? Like, oh, we love privacy. Here's this totally transparent coin we're holding. Makes no sense to me. That's why I can never stay on these trades. Never. I'm not much of a gambler, as you can see. I'm mostly, if you looked at my portfolio, you would see mostly income strategies, strangles with options. You would see me do a lot of yield farming. You would see me do all that complicated stuff, which has been working great for me in this bear market, by the way. I don't know if you guys know what a liquid locker is, but the CRV liquid lockers are trading at a 50% discount in some cases to spot. You can buy those, hedge, make some money, and it's a totally delta neutral strategy. Doesn't matter. The market does. That's my bread and butter. That's usually what I like to trade. And I also trade Bitcoin. But these trades that make no sense, like somebody tweets something that's not even true, and then suddenly it explodes. Okay. I'm happy to miss this type of trade. All right. So, by the way, apologies for my voice. I'm just a little under the weather. Barry's asking, do bonds generally get it right because they're the biggest global market makers? They make sure they get it right. That's a great question, Perry. So I started being a TradFi trader. So when I started my trading career, if you want to call it that, because back then it wasn't even that, it was just a trading hobby, 2009, everybody kept saying, so I wasn't TradFi. I loved the Bitcoin story. I read the white paper in 2012. I wanted to get into mining, but I couldn't figure out how to do it, even though actually I came to find later that you could just do it from your PC. And I had a pretty good PC, so I could have mined Bitcoin. But for some reason, never got around to do it. So let's just say in 2012, I'm a TradFi macro trader. I like the crypto story, but I'm not all in yet. It's Ethereum that really did it for me. That's when I decided to go all in. I like smart contracts. I like DeFi. As you can see, that's mostly where I have most of my money. Where was I with this? Oh, so back then it was common knowledge that the bond market is the smartest of them all. Like bond traders know what's happening. I'm a bit of a free market guy myself. Like I believe in the power of markets to predict. I believe that markets they may need to be reined in every now and then, but they are extremely efficient machines. Markets are extremely efficient at allocating resources, and they're so efficient that they have predictive power. I just think I'm not sure the bond traders make sure they get it right. I just think that bond market is quote smart. This is where the smart money is. They can tell what's going to happen. They can tell what's going to happen. If I go to this chart and I go back to 2009, this amazing forecast by the bond market that liquidity is going to start rising in 2019, and it's not going to be a one-off because there were some liquidity injections here in September 2019, the repo crisis. I don't know if you guys remember that. We were told by the Fed this is a one-off, but the bond market said no, this is not a one-off. You're going to restart QE. That's what the bond market was calling for by this amazing, spectacular rally. Well, guess what? If you went on CNBC and you listened to the smart money, they were saying QE's coming. So it's not just the bond market predicting a tsunami of liquidity back in 2019. A lot of people were. I was. I was like, okay, we've been doing QT for a while now. It's time to restart the printing presses. And so, yeah, I just think that the bond market collectively is that smart. I think that's what it is. I don't think it's anything nefarious. I don't think there's any manipulation going on here. I just think the bond market knows. It can predict that. It can predict those moves. I just think that's all it is. I mean, I remember people saying the dumb money's in the stock market, the smart money's in the bond market. When my algorithms revealed this correlation, I thought, well, that makes sense. I mean, I was taught to believe that bonds are smart, the bond market is smart, and that the best traders are there. And it's the largest market in the world, single market in the world. US Treasuries combined, largest pool of liquidity in the world, is a backbone of the financial system. I think it makes sense. I just take it at face value. I just think it makes sense to me that this would have predictive power of over other areas of the economy. I just think it makes sense. I don't question it much. Now we go to the stock market. No, do that. Let's use this one. Oh, this is me trying to look at the 2013 inverted, trying to predict 20 2026, but we can get into that later. So stock market, there we go. Stock market continues to be strong. This is probably a low. This, if you want to buy the dip, I would buy this dip. This is probably a 20-week cycle low in the stock market. The stock market does not like to go down. So this is why people say this is the dumb money. This is the last thing to move. And yeah, it is. It is. But bonds are the opposite. They're the smartest money. So I just think that's, or maybe it's just because stocks are, I don't know. I don't know what makes these things move. I just tend to not accept the idea that someone is controlling something as large as the 10-year treasury market. This is trillions of dollars. And I think most markets are, or most market participants are self-interested. They just want to make money. They want to place the right bet. They're reading what's happening and they're betting on that. They're betting on that likely future outcome out of self-interest. And that leads to these predictions. I mean, we've seen it before. We've seen it in other things. I mean, I remember I went to the US. I specifically wanted to be there for the last election because I thought it was going to be historic. And I think I was kind of right. It was a very important moment in US history, I think, at least one that I can participate in. And I was watching the prediction markets. Poly market. The poly market had it for Trump all along, in spite of the polls. So market participants, self-interest, far smarter in terms of predicting what was going to happen than the pollsters, much more. And I remember this tiny detail. Some of you might remember this. For a while, it looked like Trump was going to get Virginia. For a while. But so I went to play some bets on that. Poly market had it like 87, 80, 90% for the Democrats, Virginia, all along. Even as the exit polls were showing, oh, it likely goes for Trump. And everybody said, oh, it's going to go for Trump. But the betting markets, so the actual markets, they had it for Trump all along. Sorry, for the Democrats all along. And they got it right. They got everything right. Like the betting markets had everything right. And I wasn't surprised. I think markets are so efficient that they have predictive powers. And so that's what I attribute this bond correlation to. I just think that markets have predictive powers. They just know what's going to happen. Collectively. Like individually, we may not know, but collectively we do. That's what I think it is. And that's why I believe in markets. All right, please cover gold. We seem to be at an important turning point of whether it's going to significantly go down or up. Thoughts? Yeah, I have thoughts. I always have thoughts. So gold, let's hide this. Let's hide some things. Let's go to gold. I have thoughts, but unfortunately, I have no certainty. I just don't know. I think, so here's the thing. What I said at the last AMA, I stand by that still. Usually, as a trader, you tend to want to have at least a strongly formed opinion, right? You want to change your mind if the facts change, but you want to change too quickly. So I still think that gold was extremely overbought going into this high here in October. And I still think, and I still hold the view that because we had this massive liquidation here on October 21st, 5% plus down move, that tends to mean that this was probably an 18-month high. I still hold that view. I still, from a cycle perspective, think this market is extremely overbought. Still hold that view. That being said, man, I think it should have been weaker by now. I just have a sense, if you look at every major peak, we're right at the threshold where you would expect the market to turn down and make new lows. I think this 18-month high here in March of 22 looks a lot like what we're seeing. But as cycles analysts, we have to count time. So I count time. So how long did it take for gold to peak and then make this secondary high. I was expecting this secondary high. I was expecting it. It always, these parabolic blow of tops, they're fractals of one another. They usually all look the same, even intraday. And you tend to see one big spike high, then it goes down, then it makes a secondary high. Sometimes it's a higher high, usually it's a lower high. It's this pattern you're seeing here. It's sharp high, blow off top of sorts. It's a fractal. It goes down, goes up again. Usually it's a lower high. This is the 1929 pattern for the Dow Jones. But I mean, I've seen even slightly higher highs. I've seen all manner of these, but there's usually a bounce. There's usually a bounce. And from that lower high, again, usually lower high, it proceeds to unwind. We're right there on gold. We made our secondary high. It's not exactly the same. I don't think it's been a month, right? So a month would put us, again, the pattern rhymes. It's not exactly the same, but it's this sharp blow off top. And there's an initial sell-off. Then there's usually a reaction high, usually a lower high. And then from there, it unwinds. From there, it unwinds. Let's say gold breaks out. And by the way, anything is possible in markets. That's another thing I cannot stress enough. Anything is possible. It could do this. It could just break out, go sideways, go parabolic again. It can do that. That's the thing that makes this profession so difficult, is that there's patterns and there's probabilities, but there are no certainties. Can it do this? Sure. But I'm not seeing enough to convince me that we're going to see that. I think the odds continue to favor that October 21 was an 18-month high. And I don't think this is not my base case. This is not what I think is going to happen. I think we have a reaction high, looks to be lower. And then from there, we fail and we unwind. That's what I'm expecting. By the way, this is a massive buying opportunity if you see this, because it's very unlikely that this October high is it for gold. Very unlikely. So one of the things that we probably have to look forward to in 26, if I'm right about this is a massive buying opportunity. Probably the best of the year, the best across all of macro. This is it. Gold at around 3,000. I hope we see it. Now, to answer a question nobody's asked, do I buy this breakout? I don't know. I don't think I will. Unless I see it pull back and then back up. Then yeah, maybe I will. I might buy some calls. If I see a breakout, I might buy some calls. But I still favor the view that the market is just too overbought. But you're right. I mean, I don't know if that's what you were getting to, Perry, but I think that we're at an inflection point here. I think it's now or never. I think it either turns down before the end of the year. Listen, another thing that can happen is that I didn't discuss. Maybe it goes sideways. Listen, if I see this and then it goes like this, sure, I'll buy that. I'll buy that. I won't buy it if it goes up to a new high right away. I don't think I will. But if it goes sideways for a while and then it breaks out sometime in Q1 or Q2, yeah, I'll buy that too. Part of me is just hoping for a sell-off. I'm just hoping to see this, which is why we might not see it, because I'm guessing a lot of people are hoping for this. Because the fundamentals for gold, there could not be better. They just could not be better. The monetary system is being ripped apart at the seams, and the only thing that people are going to agree on is to trade on gold. I mean, people are dumping treasuries. There's nothing to replace treasuries. They're not going to buy Chinese debt. They're not going to buy barrels of oil. They're not going to buy other commodities. They're going to go for the one thing that's been tried and true, battle tested for thousands of years. They're going to go for gold. I mean, they already are. So nations buy this. So the big powers of the world, they cannot agree on anything. The Russians, the Chinese, the Americans, Europeans, they cannot agree on anything except one thing: gold has value. So they'll take gold and they'll settle their accounts in gold as the monetary system is reset sometime in the 2030s. I think the monetary system is reset. I think between now and then, Bitcoin has a massive, massive up move, maybe $500,000, who knows? But I think it's going to go a lot higher. But gold is also going to go a lot higher, maybe 10,000. Who knows? So maybe for that reason, since the fundamentals are so good, since the gold cycles long term look so good, maybe it doesn't go to 3,000 again. Maybe it just stays well bid above 4K, and maybe it's just like it was here in, between April and August. It's just a sideways consolidation. That's a buyable breakout too. If you see that, if you see this just become yet another sideways consolidation, I'll definitely buy that. I might even buy the low end of the range if I see it just failing to breach below 4K or 3,900. Just if every time it goes there, people buy it up, then might buy that too. So Perry, you're saying there's a lot stretch of gold in gold lows until February 2026, then intense highs. Interesting. That's very interesting. So listen, the outlook could be just based on those forecasts. It could be, it could just be. When did you say the lows are until February? Right. It could just go sideways, and then this pattern could stretch a bit. So maybe it stretches out, I don't know, into February. Yeah, so we have February and then we have highs. So maybe the pattern stretches out until February and it goes like that. Like I said, these are fractals, they're not exactly the same. So it could do this. We'll know soon. All I know is these forecasts are great because they kind of give us a roadmap for what to expect, but they're not certainty. That's why a lot of people have asked me, both at Wise and outside of Wise, have asked me, like, if you have these forecasts that are so amazing, how come you don't just pull the trigger? Well, because they fail sometimes. And sometimes I just don't know what to make of them. Sometimes, and this is what's so frustrating about forecasts, is sometimes you look back at what happened and you go, yeah, that makes perfect sense. Yeah, look, it made that low exactly what it said it should. But the pattern is not what you were expecting. So look at this, for instance. The just a small detour from the gold conversation, but this low on the 17th of October, it was the second highest low forecast of the year. Now, if you look at that, it doesn't look like anything, just a random low. But if you drill down into it, the fact that it showed a significant low, it meant that prices crashed into that low. Every time I've seen these high readings for a low, that's what happened, at least on Bitcoin. Bitcoin crashes into that low. We had another two that stood out to me. We had this one in April. Bitcoin crashed into that low in April. We had another one in August. Bitcoin crashed into that low in August. But you can already see that following that August low, is that something you should buy? Maybe, maybe not. Actually, that low was retested in September, so it didn't lead to high. The fact that we have a significant forecast for a low, it doesn't mean that Bitcoin rallies strongly from that low. Looking back, and this is hindsight is 2020. Looking back, I can see that these high intensity forecasts, what they produce is a crash. Now, what happens after the crash? Anybody's guess. It can be this, a weak bounce, and then it keeps going sideways for some time. Or maybe it's a very strong low, like it was here in April. Or maybe it's the final rally before prices just completely fall out of bed. And that's what happened this time. Now, what I'm using, and this is going to change over time, but what I'm using to tell the difference between, okay, I have the forecast, it's a high reading for a low. Okay, now we know, or now I know, that likely means that prices are going to crash. All right, so I'm going to wait until prices crash if there's a high reading. What does it mean going out of that low? I think liquidity has the answer. If we look at liquidity in April, we can see a strong rally. Okay, so we can have the outlook. Okay, it's going to crash into that low, then it's going to rally. If we go here to August, we can see that liquidity makes new lows into September. So no reason to expect. But after that, it's going to rally. So maybe by looking at liquidity and combining it with the forecast, we can say, all right, well, prices are going to crash into this low in August, but this is not the breakout because liquidity is not breaking out. So liquidity holds the key. The forecasts, they'll give you the exact date, but liquidity holds the key. And looking back,
This bounce after October 23, which we could see it on liquidity, it was too weak. It was just mostly sideways. In fact, it was exactly sideways. If you just drill down into it, sometimes I don't like to get into the weeds too much, but in hindsight, and I didn't notice this, by the way. I don't know if I mentioned this publicly, but I didn't notice. This low highlighted by liquidity, it's literally 2 days. It's one day. So this looks like a low, right? It looks like liquidity. It shows liquidity visually. It shows liquidity falling and then rallying. But if you look at what's actually happening, it bounces for a single day and then it goes down again, or sideways rather. What I was expecting is for Bitcoin to go sideways in line with liquidity. In hindsight, sideways liquidity is not a strong enough reason to buy. It's just not. You need to see liquidity go up. How do we know this? Well, if you go to 2020, 2021, sideways liquidity was enough to make prices crash or go down. The same thing happened in 25. Looking at forecasts, I can't tell any of that. So going back to gold, I'm not sure how to read those forecasts because I don't have any tool yet. Maybe I will soon. Who knows? Maybe next month I have one. But right now, I don't have any tool to forecast gold the same way I forecast Bitcoin. So I'm not sure what to make of the forecasts. I'll be honest, I'm looking at them and I'm glad you're following them, Perry, but I just don't know what to make of them. Because I know that forecasts by themselves, it's all over. I mean, I tried with the 17th of October. Yes, strong bounce, amazing that it just happened to crash a week ahead of that, just like every other time. Just a week before, prices crash. So that part of the forecast was spot on. But then what happens afterwards? That's what really matters. I mean, what kind of low are we going to get? We got nothing. So without that, without a liquidity outlook, I just don't know what to make of gold. Now, once I find something that predicts gold, I don't know if there is something that predicts gold, but if I find something, of course, I'm going to share it with you, and then we'll be able to make a lot more sense of the forecast. We're going to be able to actually use them because right now I'm notice that I'm just going by price action. I'm looking at the forecast. I notice that gold is extremely overbought, and then I go, all right, it should go down. And it should just go down based on the 18-month cycle. What low should it test? Well, it should test this range, 3,200, 3,400. That's the outlook. Am I calling for this? Well, that's what I think is going to happen. I'm being honest. Am I going to be right? I don't know. We'll see. All right. So maybe the intensity values in the forecast aren't about price levels themselves, but the intensity of the movement immediately preceding them. In other words, higher and lower. Yes, I think so. I'll tell you something else. I think so. The algorithm, the algorithm that uses the geocosmics, the planetary alignments, and correlates them to Bitcoin. The way that works, I'm just gonna explain how it works because it really is simple. It's only complicated because there's so many things to track. But what the algorithm is doing every single time is, let's say it takes the moon and Mercury forming a 90-degree, a square angle, a 90-degree angle. It takes those two planets. Well, the moon is not a planet, but it takes those two bodies, takes the moon, takes Venus. It looks specifically at the 90-degree angle, and then it goes, all right, when the moon squares Venus, when these two are at a 90-degree angle, have we seen Bitcoin top out on its 80-day cycle? Yes or no? How many? What percentage? So it says, okay, 30%, let's just say 30% of all highs, of all 80-day highs, took place in the past with Venus at a 90-degree angle to the moon. So these are geocentric. I think it works with heliocentric as well. I don't think it matters. It's going to find something. But then it says, all right, but how often is the moon at a 90-degree angle to Venus by itself, without looking at Bitcoin, by itself? And let's say it's also 30%. Well, if it's also 30%, then what we're saying here is that this angle has no predictive power over Bitcoin highs. What about the lows? Oh, well, in that case, maybe, I'm just making stuff up, 60% of all Bitcoin 80-day cycle lows took place when Venus was at a 90-degree angle to the moon. 60%. How often is that 90-degree angle there by itself? Maybe it's, like I said, it's 30%. Oh, what? So it's statistically significant. I gave that a factor of 2. That's a factor of 2 because 60% over 30. And I select those. And so these angles between these planets are being selected for their power to predict Bitcoin high and lows, 80-day highs and lows. But what I've noticed is that anything that predicts a high, this is what I've noticed in practice. A high forecast is usually a high because that specific planetary configuration makes prices go down. All right, so bear with me for a second. And if it predicts a low, what that actually means is that that specific configuration makes prices go up, or it correlates with prices going up. Here's the thing, sometimes prices are not forming a low at all. They're already falling. So for instance, here, and this is a scattered thought, this is something I've noticed. Here you might have a forecast for a low, for a high, right, on the 13th of November, and prices are already falling. Sometimes what happens, I don't have a good example here, but I've seen it before. November 25 is not a good example for this, but I've seen this before. Sometimes what happens is prices are falling, then you hit a high forecast date, and what happens is prices just fall out of bed, they crash. Massive downside volatility. Not a high, not a low, not a turning point at all. It's just an acceleration of the already established trend. Because it seems like what this algorithm is predicting is times when there's downside volatility or upside volatility. If prices also happen to be rallying into a period of downside volatility, that will form a high. But it seems to me that that's not really what I'm predicting. I don't know if that makes any sense. It seems that it's predicting times when markets are just going to be volatile in that direction. If it says high, prices are going to be volatile to the downside. If it says low, prices are going to be volatile to the upside. Not necessarily forming a low or a high. Not necessarily. Usually they do, though, but not necessarily. So sometimes, if gold, let's say, is rallying, I think this was true, by the way. Let me go back to Bitcoin. I think this was true in November of 23. So in November of 23, we had this rally. All of November was a high forecast. What happens is Bitcoin just stalls. It's almost as if that prediction for downside volatility made prices stop moving higher. And as soon as we cleared the window, Bitcoin was free to rally strongly again. What happened here was there was a high forecast. This is not a good example, I know. I don't have any good examples of uptrend. Let's say I've seen this though. This is a good example. So I think mid-February, late February was a forecast for a low. And is this a low? Not really, because just going sideways for a while. It spent a week going sideways. That's not really a low. What happens is this low forecast produced massive upside volatility. This is the rally that ended this larger Q3, Q4, Q1 rally, right? So prices accelerated massively on this low forecast for February. Not really producing a low. Prices just accelerated in the same direction. Sometimes that's what happens. So like I said, I just don't know what to make of it yet. I do know what to make of these forecasts once I add, at the risk of sounding like a broken record, once I add this. Come on, load. There we go. So once I add this, once I add the liquidity forecasts, then I can make sense of it. Then I know what to expect. I'm like, all right, this is probably going to be an acceleration to the upside, right? This high forecast in March, which we had it down to the day, this is probably going to be a high. Guess what? We also had a forecast for a high in early April. I think it was April 9. The actual high was April 8. And you can see this entire period acting as a potential high. The same thing is reflected by the geocosmic forecasts. So the way I'm gravitating toward forecasts is I don't look at them in isolation. I think this is one of the bigger takeaways for today is I don't look at these forecasts in isolation. I just don't just say, hey, there's a forecast for low potentially on November 20th here on this candle. There's a forecast for low, it's 2.5. 2.5 is strong. It's 2.5 standard deviations. Remember that intensity reading, that is a standard deviation from the mean of the last 24 months specifically. And I don't just look at that and go, well, 2.5 is a lot. 2.5 standard deviations is a lot. Anything above 1 is significant. Bitcoin's going to explode higher. No, because liquidity is going down. That's why I tried to start the session by saying, hey, don't expect much because liquidity outlook is still bad for the remainder of this year. So I would take any low forecast with a grain of salt. If you're inclined to sell short, what I would do is look for high forecast to enter short positions. That's all I would do. I would not buy anything here. I don't care how high the reading is. I think I want to learn my lesson from October 17th. Did not produce anything noteworthy. It was only noteworthy for us. I think I think some of you as well, maybe you yourself, Perry, because we were looking forward to it. We were anticipating this to be significant, and I think it was. I think it was, but not the right kind of significant. This is why I still, maybe 5 years from now, because I think it's going to take some time, maybe in a few years, I'll be able to use those forecasts and make more sense out of them just by themselves. But for now, I need something to aid the outlook. With Bitcoin, I found liquidity, but with TradFi, I haven't found anything yet. By the way, I also have forecasts for liquidity itself. It should not surprise you, but it has the same cycles as Bitcoin. Duh, they're the same thing. Funny enough, the same cycles show up. They're similar. There's no 80-day cycle. It's 160 days. But other than that, same cycles. All right. So I'm going to wrap it up in about 10 minutes. So this is the last question because I'm just beat. My voice just can hardly handle more. But let's go with this. So Perry's asking, did you show us how to offset ZN1? Per Discord so far is asking me a lot of questions, la, 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 la. Yes, he wanted to know how to do this. Let me show you. That's a perfect way to wrap it up. All right, so here's what I do. This is a little, let me give you a tutorial of how to reproduce this chart, and hopefully I can also show you how to add Bitcoin to this chart, because you can add Bitcoin too. So here's what I'm doing. I don't know if you noticed, but I'm not showing the actual market. This is the actual market, right? I'm hiding it. I'm hiding this. Now, let me start by saying, we know that bonds predict liquidity. Bonds look forward to liquidity. So, but there's no liquidity market. We can change the offset for liquidity, but if we had the actual dates, if you try to reproduce this chart, you probably found that you cannot just bring up liquidity and then bonds and have it show you the actual dates. So what you need to do, what I'm doing, is I'm using a 1-day moving average for liquidity. So for bonds, sorry. Because this I can move around. And I can move this forward. Right? I can move CBL forward and backwards. I have the offset setting for that. But the actual price action, the bond price action, I cannot move it. You cannot displace this. Instead, what you do is you use a 1-day moving average. That's the simple trick. 1-day moving average, it shows you a line. You can move that line around all you want, just like a classic Hurst FLD. So in this case, I ran this model with a weekly chart because with a daily chart, it didn't show anything. But I turned those weeks, those 44 weeks, it translates into about 210 days. This is trading days. So you can add this up. And so you just bring up a 1-day moving average, 210 days, that's about 44 weeks or 10 months. And then liquidity, you just get rid of the offset. No offset for liquidity. we're trying to forecast liquidity now. We're not trying to use liquidity to forecast Bitcoin. We're trying to forecast liquidity itself. So the offset on liquidity, 0. And then in order to be able to move the bond chart around, just use a 1-day moving average. This is what I'm doing here. Now, it gets a bit more interesting. The 84-day offset, 84 calendar day offset, translates into about 60 trading days. So look what I can also do. I think I showed this on the Discord. This is a bonus track for you. You can click on this, which is compare or add symbol, and you can bring up Bitcoin itself. Of course, you need to move everything to a different chart, so everything needs to be moved to a new right scale. I like to have everything on the right. Actually, you know what? This looks awful. Oh, I can't change it now. Whatever. You can move it to the right. You can move it to the left. So now we have 3 things here. We have Bitcoin in blue, orange for liquidity, black for bonds. Now, this chart is using the offset that you use to predict on the bonds. Use the offset to predict liquidity. If you add 60 trading days, however, now we're adding the offset for liquidity onto the bonds. And now we add the same offset here. And now here we have an outlook. And again, this is not perfect. I'm aware of that. That's why I don't show this more. But now we have bonds forecasting liquidity, forecasting Bitcoin. I love this chart. Now, I just want to say, this is going to be off, all right? This is not going to be perfect. This is going to be off by several months, probably. If it's right and Bitcoin bottoms out on February 9th, I'll be super happy. This model has proved its worth. I don't expect it, though. I will say there's a few interesting things about this chart, especially the black line as it compares to Bitcoin. All right, so a couple interesting things here is we have bonds actually predicted Bitcoin stop much better than liquidity did. Random luck, but it's worth paying attention, I think. Bonds are also showing Bitcoin rallying here. Again, this chart now that I added the offset to liquidity, 60 trading days, and then the 270 days for bonds. Now, both of these are predicting Bitcoin. The black line is bonds predicting Bitcoin, and the orange line is liquidity predicting Bitcoin. And of course, the blue line is Bitcoin itself. So now we're using bonds and liquidity to predict Bitcoin. And there are some interesting things here. It shows a bounce, a pretty powerful bounce for Bitcoin. And, it should be, I think this is a percentage chart now. I don't even know what this is measured in, but this is predicting, for what that's worth, a 15% rally in the price of Bitcoin. And that should give us, let's see, what would that give us? About 100K, 96. So it's interesting that the bond chart is sort of predicting a rally in Bitcoin here, and then a low sometime in January. Now, I already ran the forecast for the first 6 months of 2026. I deleted the file, and it did not include any data from 2025, so I don't know what to make of that. But there was a very high reading for a low, and I think it was in January 15. So, and bonds are kind of showing a low for February. All right, that's also why I'm kind of expecting liquidity to move up here, is because, yeah, I mean, if you look at bonds to forecast Bitcoin, it lines up with the high very well. Doesn't line up. It lines up with the high here also in January of 25. It does not line up with the low. So again, bonds are not perfect, especially if you want to do the logic chain, right? You want to go from bonds to liquidity to Bitcoin. The more leaps you do, the less robust the model is going to be. I'm pretty sure if I try to run the 10-year bond to forecast Bitcoin, I'll come up empty-handed. It will show nothing. So what we're doing here is a little dirty. We shouldn't be doing this. But we can, because why not? It gives us an outlook. It gives us something to look forward to. And it is kind of showing an interesting rally here, and it's showing a lower low. Bonds are doing, this black line is doing pretty much exactly what I expect Bitcoin to do. I expect it to bounce, I expect it to make a new low into Q1 next year, and I do expect a serious rally in Q1. And check this out. This is another thing that's interesting because this guy at Weiss that had me do the forecast for the first 6 months, he said, the first 6 months, do you see any prominent lows, any prominent highs? And I said, yes, I see a very prominent low in the middle of January. By the way, bonds are saying February, but that's okay because bonds were no, it's going to be off. So February, it can be off by a month. That's fine. I'm happy with that. Showed a low for January 15, and it showed a major high on April 20th. And guess where the bond proxy peaks? May 4th. That's close enough to April 20th. This may well be what happens. A bounce now, we may be seeing it now, a peak sometime, according to this, in January. I expect that high to be probably in December, some type of low February, January, and then a meaningful rally. This Q1 rally, this rally I would definitely trade with alts, that type of stuff. We're not going to discuss it today because Bitcoin's falling and liquidity does not confirm this outlook. So let's wait and see. But this Q1 rally, I think, would be of the kind you can trade, the kind you can definitely buy some calls, buy some altcoins, look for things that maybe outperform, maybe things that make the all-time highs. So this Q1 rally, I'm interested in this Q1 rally. I am not interested in this one. This one, I don't care about this one. This is a bounce. Sell some puts. Maybe. That's what I'm doing. But this one, the one in Q1, the one that's being forecast by bonds, liquidity, not liquidity yet, that one, yeah, that's the one I'm looking forward to next. This is when I'm probably going to, whatever I still hold will be sold here. And I'm definitely going to try and I'll figure something out. Maybe the vaults will definitely buy into this Q1 rally. They'll buy into this one. So with that, I will say thank you so much. If this was not clear, I'll put up the you can watch the recording just to go over it quickly. To do this bond forecast chart, you want to go to ZN1. So this is, you show bonds. The black line is just a 1-day moving average. Only reason for that is I can move it around. Everything else is going to be, if I bring a comparison tool like Bitcoin here, I cannot move this. So this will be in real time. And liquidity, we can move around. So we can play with this. So we can use, the bonds forecasting, liquidity forecasting Bitcoin chart, which is a fascinating chart. We'll see if it works out. Maybe it doesn't. It's my first time doing this. But it's my reason to be hopeful for next year, at least, not for the remainder of this year, but it's my reason for hope. So with that message of hope, I hope you enjoy this AMA. I'll see you everybody on the Discord. And hey, hopefully this works out. If this works out, guys, you heard it here first. I have not seen anyone make these types of predictions. In fact, I've seen people claim that bonds follow liquidity, which that's not true. They do not. They forecast it. Anyways, I'll shut up now. My voice is super tired. I'm going to get some coffee, some rest, and I'll see you guys in the Discord. All right? Cheers, everyone.